The Fed's not going to let the default happen. The only question is, what is the trigger? When is the next financial crisis going to happen? And I guarantee you that within days, possibly even hours, you saw what happened in 2020, financial crisis, lockdowns, and then bam, like that day, they printed up like $500 billion in the repo market, and all of a sudden the money supply started to just go vertical. It's going to happen again this time, but even more extreme. And it's going to be sometime in the middle of the night, and there's not even going to be a press conference about it.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Rising demand in scrap silver reflects strong market dynamics. Data insight, as evidenced by the Scrap Monster Price Index, there's a noticeable increase in the prices of both hallmarked and non-hallmarked scrap silver. In the hallmark category, there was a boost of $0.29 per oz, and in the non-hallmarked category, there was a rise of $0.26 per oz. Relation to primary silver market. Scrap silver represents a segment of the secondary silver market. When prices in this sector start moving higher, it often reflects broader market dynamics where demand is outpacing supply. Even though it's a secondary source, the scrap market can provide critical insights into the primary market's health. Economic implications. The upsurge in scrap silver prices might be indicative of a larger economic trend. When scrap prices rise, it could mean that industrial users and consumers are holding on to products containing silver for longer, possibly due to anticipation of even higher prices in the future. Alternatively, it could reflect a scarcity in primary sources, leading industries to rely more on recycled materials. Comparison with other precious metals. Interestingly, while scrap silver prices are increasing, the price of platinum scrap experienced a decline. This divergence in price trajectories can mean that silver, as a commodity, might currently have stronger market fundamentals than some other precious metals. Future projections. If this upward momentum in scrap silver prices continues, it could trigger an influx of more scrap silver into the market, as holders might find it lucrative to sell. However, the primary market cannot meet the demand with adequate supply. The prices are bound to surge further. Given the current trends, reaching a price point of $28 for silver in the near future doesn't seem far-fetched. Technical analysis indicates potential rebound. Historical support levels. According to the provided silver market analysis, silver has recently approached a price level that has historically served as a significant support. This market memory is crucial in technical analysis, as previous support levels, once breached, can often act as resistance points and vice versa. Signals from trading sessions. Silver showcased a strong rally during the last trading session, reaching its previous support level. If this level holds, it could indicate a potential pivot point for the market, signaling a change in the downtrend. Moving average indicators. The article mentions two critical moving average indicators for silver, the 50-day EMA and the 200-day EMA. Breaking above the $22.60 level in the futures market could lead silver towards these moving averages, which many traders and investors consider when making decisions. Successfully surpassing these averages might not only confirm a bullish trend, but could also pave the way for further price ascension, possibly reaching the $25 level as a stepping stone before advancing toward the $28 mark. Momentum and volatility. The presence of a very strong candlestick in the technical chart indicates a robust bullish momentum. However, given silver's volatile nature, it's essential to monitor if this momentum can sustain. Strong momentum, backed by favorable market dynamics, could serve as the propellant for silver prices to breach higher resistance levels. Macro influences. Typically, silver tends to move in the opposite direction of interest rates and the US dollar. Given the global economic conditions and potential shifts in monetary policy, these correlations might play a pivotal role in determining silver's price trajectory in the short to medium term. Market sentiments and psychological factors. The significance of resistance. Resistance levels, particularly those with historical significance, don't just serve as technical indicators. They also play a psychological role in trading. As silver nears these levels, the market watches closely, and positive breaks can drive sentiment-driven buying, further propelling prices. Market's reaction to previous levels. The fact that silver has approached a point that was previously a strong support level is noteworthy. In market psychology, such areas often breed hesitation, as traders and investors remember the past significance of those price points. If silver breaks through, it could instill renewed confidence in the market, potentially sparking an influx of buyers. Anticipation of future movements. The mere discussion of silver potentially reaching the $25 mark, as mentioned in the analysis, can lead to anticipatory buying. Traders and investors might opt to enter the market now, forecasting further hikes, thereby driving demand and consequently pushing prices upward. Volatility as an opportunity. While silver's volatility might deter some, for others, it represents an opportunity. The high-risk, high-reward nature of volatile markets can attract speculative investments, which, when combined with strong fundamentals, could further boost silver's rally towards the $28 mark. External news and developments. Market sentiments aren't just driven by charts and numbers. External news, geopolitical events, or significant announcements related to silver production or consumption sectors can influence traders' sentiments, leading to reactive buying or selling. It's essential to remain attuned to such developments, as they might offer cues for accelerated price movements. Correlation with other financial instruments and macro factors. Inverse relationship with USD and interest rates. Historically, silver has shown an inverse correlation with the US dollar and interest rates. When the dollar strengthens, commodities priced in dollars like silver tend to decrease in price. Similarly, when interest rates rise, yield-bearing assets become more attractive than non-yielding ones like silver, leading to a potential decrease in its price. Given the current economic climate, understanding shifts in these indicators is paramount. Comparative performance with gold. Silver often follows gold's market trajectory, but with amplified movements given its higher volatility. The recent surge in scrap gold prices, as indicated by the rise in various carat gold scrap prices, suggests a bullish sentiment in the precious metals sector. This positive sentiment for gold could spill over to silver, offering it additional upward momentum. Global economic outlook. Silver is not just a precious metal, but also an industrial metal. As such, its demand is tied to the health of the global economy. If there's optimism about economic recovery and growth, industrial demand for silver could increase, pushing prices higher. Monetary policies and inflation. Central banks worldwide are grappling with post-pandemic economic strategies, which might involve shifts in monetary policy. Quantitative easing or policies aiming to tackle inflation could impact real interest rates, influencing silver's appeal as a store of value. Supply dynamics. While demand factors are crucial, the supply side of the equation can't be ignored. Any disruptions in major silver-producing regions, be it due to geopolitical issues, mining challenges, or labor disputes, can lead to supply shortages. Given a steady or increasing demand, any squeeze in supply could expedite silver's journey toward the $28 price point. Market liquidity and investor behavior. Trading volume and liquidity. For any asset price to move significantly, there needs to be sufficient liquidity in the market. High trading volumes can lead to smoother price transitions, enabling rapid ascents or descents. If silver sees a surge in trading volume, it could indicate strong investor interest, supporting the push towards $28. Retail versus institutional investors. The behavior of retail and institutional investors can differ substantially. While institutional investors might take longer-term positions based on comprehensive research, retail investors might be driven more by sentiment and short-term gains. A balance of both in the market can lead to diverse trading patterns, influencing price dynamics. ETFs and derivative products. The presence and performance of silver-backed ETFs and other derivative products can provide insights into the broader market sentiment towards silver. A surge in inflows to silver ETFs could indicate bullish sentiment. Historical behavior. Historical data, including past reactions to similar price levels, economic conditions, or news events, can offer insights into potential future behaviors. Understanding how investors reacted in comparable situations can be invaluable. Global investor sentiment. Given silver's global appeal, it's crucial to consider investor sentiment not just domestically, but from around the world. Factors like currency strength, geopolitical tensions, and regional economic conditions can influence international buying and selling patterns, impacting global silver prices. Disclaimer: the content provided in this analysis is for informational purposes only and should not be considered as investment advice. Always conduct your own research and consult with a financial advisor before making any investment decisions.